Hey guys, welcome to another video in our series on simple trading strategies. This one's actually quite a common trading strategy I want to talk you through. We've done a lot of longer time frame stuff. We've done a lot on the 4-hour charts, daily charts. This time I'm going to give you a bit of an intraday system and an intraday strategy. This one's actually quite a common one used in the market, and I'm sure a lot of you have already heard of it. It's essentially called fading, and it's commonly done with Bollinger Bands, but I've seen it done with a few other instruments as well. Firstly, let's quickly run through how my chart is set up here. You need three real indicators on it. You've got your Bollinger Bands here, which is set to a 14 period, which is normally the default, and we've got 2 standard deviations and 3 standard deviations. So let me just bring that up so that you can see it. And that's essentially how I've drawn my chart. The 3 I've got is my red line, the 2 I've got is my yellow line, then I have an ADX. And as the nice NinjaTrader description shows, this is essentially giving us a how much is the market trending versus how much is it is volatility. And we've set this to a period 20. Essentially, what we're looking for in this is we're looking to fade moves in non-trading markets. So essentially it's looking for overly aggressive volatile breakouts that have probably pushed a little bit too far. Now if you think of your standard bell curve, for those of you who are familiar with maths, third standard deviation, obviously in theory there should be very few. If you took a normal distribution of the prices around the mean, there should be very few prices that hit the third standard deviation. It would be an extreme, it would be the tail. Now that would only work if you weren't in a trending market. As soon as you're in a trending market, that changes. What we're looking for here though, in order to fade a move, is we're looking for price to hit or touch the third Bollinger Band. Then we're looking for it to close above the second, and then we're looking to trade the move back in the direction of that. So we're essentially fading this move lower to go higher. Rules are very simple. When you see the touch of the third Bollinger Band, you need to look for a close above the second Bollinger Band. So this one's closed actually below the second Bollinger Band. This one's closed above. Then you'll place a trade. Normally it's at the close of this bar if you can get it, or if you get a nice retracement, then you can go for, you know, the close of this bar or something similar. You can look for a nice little retracement, look for previous support lines. There's a nice support line there. You might have been able to get that. The key is though, when you're doing this, you need to look for a non-trending market, and we define a non-trending market in this technical system by a value of less than 25. Now you might have got away with this one because at the time of this first one it was less than 25, but let's start to look for some good moves. You can see this is a trending market here, so it doesn't quite touch the 3. You possibly would have taken that one at the time depending on where the ADX is plotted, but this isn't the sort of thing we're looking for. That is though. So essentially what we'd be looking for here is we've got a nice close above. Potentially you might have got in on this candle here, but this one, what we're doing is we're placing the stop below the third Bollinger, or about 15-20 pips if this is a little bit too high, and then we're essentially going to move our stop up every time we hit 1-to-1 risk reward. So I will find another one that's probably, yeah, there you go, there's a really nice one that's actually breached and then closed below. So what we do in this case is I'd stick my stop above this recent high. Let's say we got in, actually that one closed below, so we got in there. And what I'm going to actually use is our fib extensions on NinjaTrader to plot me risk reward lines. So if I double click here, it's got that. Now what I actually have is a risk reward template, and if you look at it, all I've done is I've set the anchor lines to 100, 200, and all this means is it's now going to apply those lines to the difference between my stop loss, this top line here, and my entry is going to be my one risk, and then this is 1 risk reward, this is 2 risk reward, 3 risk reward, 4, 5. Essentially I get my stop there. Every time we move one, we can either look at moving our stop up, or we can look at moving our stop up every 2. And in this case, moving it up 1, you'd actually probably get to, what? You get 1-to-1 risk reward as it comes back. Essentially what you want to be looking for is 2-to-1 risk reward on each of these trades if you can get it. You only really need a minimum of 1-to-1, and this system would be profitable. So hopefully that makes sense for you guys. A very short and sweet system. Essentially what you're looking for is the price to hit the third Bollinger Band, it then needs to close inside the second Bollinger Band. So if we're looking for a short, then it's got to close inside here lower. If we're looking for a long, and we need the ADX to be below 25 so that we can say that we're in a range bound market. There's another good one there that would have popped back up. You could have got some good profit on some of these trades. Again, here we wouldn't be looking at this because we're already in a range bound market. See if we can find, well, here's a nice one here as well. This is obviously, look at the scale, is actually changed drastically, but we're nice hitting the third Bollinger Band here. We close above and then we go higher. That would have been a nice one to get. You could have even got this nice short here as well. Obviously depends what hours you're trading in the market, but that was a nice one as well. Typically I'd look to trade these during market trading hours, so make sure that you're not outside the range, and I would try and avoid the US session, mainly because of the US overlap with the UK markets can create more volatility. So try and stick to the Asian or the UK session in the morning, typically when you'll find your best systems. Anything beyond 1 to 4 p.m. UK time, or when you're entering the market in the US, tends to be more volatile. US evenings would be a good time to try this one as well. Alright guys, that's it from me. There's another one in our simple trading strategies. If you've got any questions or any feedback as ever, please get in contact. By the way, there's another good one there. And let us know what you think. Ciao for now.